Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for the segment, we have Chris Volpe, Director at Zephyr, to discuss the growth in separately managed accounts, known as SMAs, and wealth management trends. Chris, it's great to see you. Welcome to Trade Talks.
Hi, Jill. Thanks for having me. Appreciate the time.
You got it. Tell us about some of the benefits and how they contribute to the rise of SMA popularity.
Sure. I think primarily, very much like other alternative assets, technology and innovation have given them an opportunity to get into a wider market. So you see SMAs as part of model portfolios now. You see them with lower investment minimums. And so I think that's driving a lot of it. Also, you get to see a lot more transparency. With an SMA, you actually own the individual assets as opposed to a mutual fund where you own a piece of the assets, right? So you actually see what assets you're invested in. You actually own the shares of the securities or whatever it is that you're investing in. So it's a lot more transparent. Also gives you those tax advantages of actually owning the individual shares as opposed to just owning interest in one.
It also allows for more flexibility as well, but I also want to know about the availability of SMA data. I'm sure that expanding has helped advisors and their clients when it comes to SMA.
Yes, somewhat different than mutual funds. SMAs are not required to report, so the reporting is done by the SMA manager, by the asset manager directly to folks like us who've been collecting it for a little over 30 years. We aggregate it and then we distribute it to clients to be able to evaluate those SMAs, better understand what's in them, better understand what their goals are, because they're not really, they're not governed by a prospectus. So it's a bit more flexible, like you said.
What about an SMA versus an ETF? Is the difference because SMAs are specific to one client versus an investment manager picking a specific theme?
Yeah, ETFs are typically passive. So you get into an ETF and you're sort of tracking to an index or to a specific thing, whereas SMAs are really driven by the manager. It's what the manager wants to invest in. With if you're in a large cap SMA, you'll be invested in the large cap stocks, but from after that, it's really just a matter of what the manager wants to do. So it's a lot more actively managed.
Tell me about Zephyr's SMA database.
So PSN is our database, and we've been, as I had mentioned, we've been collecting SMA data, over 200 different data points from managers for over 30 years now. We've aggregated that data. We can actually not only show you the individual SMAs, but we show you the holdings in those SMAs. You get to run all sorts of statistical analysis on them, as well as return-based analysis, and also style analysis. So you really get to dig into the opportunities and where the SMAs are coming from.
Let's talk about some other wealth management trends. Hearing a lot about alternative investments and advisors this year.
Yeah, again, I think that they're, because they're coming down a little bit in where they can go. SMAs and other alternative investments, if you think of private equity and private investments, used to be for the institutional and ultra high net worth. With the innovations and technology, they're coming down, and now through things like interval funds and fund of funds, you can actually invest in them with much lower minimums than you could before. Similar to what you saw in a real estate trend, REITs used to be, very high net worth, and now, just about anybody can get into a REIT.
Are you hearing from advisors that with this technology and the products that are available, are they able to spend more time with clients and do more things, focusing on service, focusing on the market?
Yeah, that's actually the biggest thing that we're hearing from our customers in the advisory world, is this gives them the opportunity to spend more time with clients, better understanding their goals, better understanding their entire financial picture as opposed to just investments. And that gives them the opportunity to help them in other ways. And really, ultimately, being a financial advisor is about service. If it wasn't about service, it'd be a lot easier to take on, a robo fund or, something that doesn't give you that opportunity to better understand your clients, their environment, and their total financial picture.
All right, Chris, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill. Have a great one.